What's up everyone, it's Caddy with Money Vesting. So in this video, I wanted to talk about the two massive decisions that are coming up in the next few days. One of them is going to be tomorrow and the other one is going to be on March 22nd. We'll talk about that, what those are. And the reason why they're so important is because not only do we have Silvergate and then Silicon Valley Bank and Signature Bank all collapsing in the US, and of course the entire banking sector under a lot of pressure. But well, this morning we also had Credit Suisse under a lot of pressure, right? Credit Suisse down over 20%. It's down over 96% from its all-time highs. It's never been able to recover from its 07-08 debacle, and it's been under a lot of scrutiny. It's pretty much gone through a string of scandals. I've done several videos on it. It was more apparent back in October when we were talking about it. I remember actually being in Zurich at the time, and Credit Suisse was again reporting earnings, and we were kind of waiting to hear what their plan was going to be. And at the time, they also pointed to a spin-off in their investment banking division and then also their wealth management business. So what really happened and why the stock price is down today, I'll break that down and then go over the two massive decisions that are coming up over the next couple of days here. So on Tuesday, March 14th, which was yesterday, Credit Suisse said in its 2022 annual report that the bank has identified, quote, material weakness in internal controls over financial reporting. And the reporting weakness comes as Credit Suisse is seeking to recover from a string of scandals, as I mentioned earlier, that have undermined the confidence of investors. And so far in the fourth quarter of 2022, the outflows from Credit Suisse rose to 110 billion Swiss francs or 120 billion US dollars. That's a lot of outflows for this company. So another piece was the top shareholder, which is the Saudi National Bank, and their chairman, Amr Al-Qodiari. Again, I do apologize for the pronunciation there. He says, and I quote, the answer is absolutely not, for many reasons outside the simplest reason, which is regulatory and statutory, when asked about investing more into the company, injecting more cash if the company needs it. Because Credit Suisse, for those of you who don't know, was going through a big liquidity crisis, similar to what Silicon Valley and Signature Bank are kind of going through or went through. Saudi National Bank is one of their largest holders with, I think, 9.9% equity into the business. And they actually invested back in October, November, like 3 months ago. And unfortunately, they're already down 25 to 30% on their position. So the bank is just months into a complex turnaround plan that will see the Swiss firm spin out their investment banking unit while focusing on its key wealth management business. And that effort risks being further complicated by markets' unease across financials after the collapse of multiple U.S. regional banks. In just 3 months, they have ruled out investing more into the Swiss bank because of the additional loss that they're holding on to. At the moment, the Saudi National Bank, which is 37% owned by the kingdom's sovereign wealth fund, became Credit Suisse's biggest shareholder last year after acquiring 9.9% stake in the Swiss lender for 1.4 billion francs. And the stake has lost more than 500 million francs in a matter of months. So about $500 million already been wiped out, as Credit Suisse has pretty much dropped more in the last 3 months. Now, there is a turnaround plan, which is very much focused on their earlier acquisition from back in 1996 when they did, I believe it was the year 1996, might have been a little bit off there, but they did acquire First Boston Public. And they are kind of spinning that out a little bit. And then again, focusing more on investment banking and wealth management separately. That IPO is expected to go on board in 2025. But the main reason for the sell-off really has been the liquidity crisis and the fact that their biggest investor is reluctant to invest more into this company. It's down 20%, trading as low as $2 or €2. Yeah, $2 per share. And the credit default swaps, which is the credit default swaps, in other words, the inverse trade, expecting that this bank is going to go under, not being able to pay up its bond obligations, have pretty much spiked to a record high at 875. These are the Credit Suisse credit default swaps over the next 1 year. And again, this was a tweet from Genevieve. Shout out to her. Down 96.7% from all-time highs. Credit spreads blowing up, and Saudi National Bank says they won't assist anymore. This bank is drowning fast. Now we get down to the big decision, and that is going to be these two folks. Two massive decisions coming up. So we always talk about the Federal Reserve, we always talk about Jerome Powell, but we don't talk about Christine Lagarde enough. And that's the European Central Bank, so ECB. Very, very important. And they're really got two big decisions on their hands, whether to raise rates or to not raise rates. Because if you compare, the two scenarios are very, very similar. In the US, Jerome Powell with the Federal Reserve, we've got Silicon Valley Bank, Signature Bank, we've got First Republic Bank, we've got Silvergate, the list goes on, and regional banks. Over the weekend, the Treasury Department had to step in, the FDIC had to step in, the Federal Reserve had to also stabilize the market, and it's really going to come down to whether we see a rate hike or a rate pause going into next week on March 22nd. The market's right now expecting a little bit more of a pause from the Federal Reserve. But tomorrow we've got a meeting for the ECB in Frankfurt, and Christine Lagarde is going to be in a very similar dilemma because European banks and European stocks also started dropping on the back of Credit Suisse. So this banking crisis, once again, a little bit more contagious and affecting European banks and European stocks as well. So that's also going to be on the radar. And of course, a big question for us because the Governing Council decided to raise the three key ECB rates by 50 basis points. And right now, the margin lending facility and the deposit facility will be increased to 3%, 3.25%, and 2.5% respectively. This also includes refinancing operations and will take effect from February 8th, 2023. However, in that statement from February 2nd, they also mentioned this right here is a line that in view of the underlying inflation pressures, the Governing Council intends to raise interest rates by another 50 basis points in its next monetary policy meeting in March, and it will then evaluate the subsequent path of its monetary policy. Well, tomorrow is the March meeting. I'll find out if anything changes considering what we are seeing with the banking sector and especially what we saw with Credit Suisse today and other European banks as well. So those are the two massive decisions coming up, two very, very important people. If you take a look at the markets right now, we are seeing Credit Suisse still down a little bit over 15%, although recovering a little bit. So we're seeing some buyers step in. So very strong green candle coming in back over 210, 16% down. But if you take a look at some of the Euro stocks, so let's just go over to Euro stocks 600. So that's going to be, let's take a look here. That's going to be SXXP, still down over 2.14%, so down 440. That's the Euro Stock 600 index, definitely selling off. And we got the 10-year yields still rolling over. We got the NASDAQ obviously down over 1%, and the S&P down 1.3. The Dow still down 1.4%. So let me know your thoughts. Let me know in the comments, what do you think? A pause, a cut, or a raise? What is it going to be from those two folks over there? And I will be live to cover the ECB report and the live stream tomorrow, and Christine Lagarde's statement with respect to interest rates and her sort of perspective on Credit Suisse as well. So we don't cover ECB enough. I think we really need to, and we should. As always, if you enjoyed this video, found it helpful, make sure that you drop a like, subscribe to the channel if you're just joining us for the first time. The link to our Discord and Patreon is going to be down below. As always, happy investing. I'll see you all in the next video.